What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Spirit Airlines, ticker symbol SAVE, on a variety of time frames in anticipation of tomorrow's trading day, Thursday, February 1st. Well, Spirit stock here today, finishing down just 10 cents, about 1.5%. Let's take a look at this on a variety of time frames and try to get the most context possible, and then lay out some bullish and maybe even potentially bearish scenarios as we head into tomorrow. So if we take a closer look at the 1 minute chart, I just want to zoom in here. We saw this early morning kind of pump. A few scalp opportunities hidden in here, actually, if you take a closer look, if the liquidity happened to be good enough at that time. With a stock like this, if you're looking for intraday opportunities, you have to be sure that that bid-ask spread doesn't destroy any potential edge that you may have in the setup. If you do want to come trade with us every day, scalp setup alerts, unusual options activity alerts, swing trade setup alerts, and platinum one-on-one all can be found by joining the Roensch Capital Gold server at that link in the pinned comment. Get grandfathered in. Hope to see you join. But what we really need to look at here is the 5 minute chart on the volume. Okay, because we saw this big pump off the open. If we go from like where we actually opened to there, that was nearly a 6% pump. Now, what's really interesting is if we look at the volume there on that move, it was, of course, off the open. So we're getting the majority of the time, you're going to see the highest volume of the day. But what you want to see, okay, is bigger volume as much as possible on moves that confirm your bias. Now, granted, this fade actually saw at least one pretty big volume candle. But as you're watching SAVE stock here in the next day or two, like tomorrow, for example, keep an eye on the volume. And if the stock is, let's say you're bullish, if the stock is moving aggressively upside, you want to see that occurring on as much volume as possible. Why? It's a bigger sample size of the market supporting your existing bias. Let's say if you're bearish, right? For example, if the stock is pushing higher, you want that occurring with as little sample size as humanly possible, meaning as low volume as possible, because that might support your existing thesis of like, okay, hey, when the volume comes back in, we get a bigger sample size, we're going to start to see this thing fade, because right now we're seeing a small sample size of bulls push it higher, right? There's a very common strategy, and that, again, that's just an example. It's a very common strategy for institutions and funds to get long stocks that they have a long bias on, but haven't been able to build out a position because the price was too high. If they see low volume pullbacks, like specifically on this can even be intraday, but specifically on the daily chart, low volume pullbacks offer a lot of opportunity for institutions to build out bigger long positions with minimal risk, or at least minimizing risk to the best of their ability. So let's now take a look at the 30-minute chart. We can start looking at actual like self-fulfilling prophecy levels that are really important to watch. You can see here this white line, that's the 50-period moving average. Look, this is on my watch list to watch on Spirit stock here tomorrow. This thing is incredibly in play. We're seeing a lot of decisions being made around that level here on the 30-minute. It's a very popular time frame. We know people are watching this. So listen, really simple here. If you're bullish, ideally, you'd like to see this continue to act as support as it has the last couple of days, breaking downside here, primarily in the lower volume after hours. I'll always, take after hours movement with a grain of salt when it's lower volume, always. And for that matter, if you are bearish, you want to see us obviously break downside through that 50 period and, respect it as resistance as we saw a few trading days ago. That would be your ideal scenario here, looking at the 30-minute chart. But that's really all I'm watching here on the 30-minute, aside from a potential, if we end up seeing, it's not out of the question, we've seen some volatile moves here as of late on Spirit. That 200 period to the upside, if we end up seeing an upside test of that, I would be watching that as a potential area of resistance. Obviously from a bullish perspective, looking to break through that and reclaim that area as support. Let's zoom out now to the 4 hour and take a look. Again, highly relevant area. Look at this 50 period, right? That white line. It is currently acting as a potential resistance in the last couple of days. That's currently sitting right around 6 3/4, 676. So tomorrow, looking to reclaim that level. If you're a bull, if you're a bear, ideally, not only continue to respect it as resistance, bouncing, rejecting hard off that level, but fading to the downside would be what you would be looking for, down through 6 if you're a bear. If you're a bull, Just get up out of this channel between 6 and 676, really 675. Get up through that 50 period here on the 4-hour chart, reclaim it as support, and just get ourselves up out of this hole. That's your number one priority, looking here at the 4-hour. Let's now take a look at the most important chart here that everybody needs to be aware of. Take a look here. Of course, we have earnings coming up on this name on February 8th before the market opens. This here is the daily chart. Now, understand that the 200-day moving average, that gray line, and the 50-day moving average, that white line, those things are going to take time. We've seen this big move recently, obviously, and the daily chart is the most delayed that we're going to look at here today because it's the longest time frame. So those two are not necessarily immediately relevant, at least compared to where the stock currently trades. But I think by far the most obvious couple of regions here on the daily chart, at least here in the near term, you have up here right around 850 to 9. You know, that $8 to $9 region is clearly an area of some interest, acting on both sides of the ball, so to speak, both support and resistance, just within the last couple of months here, a few months. But again, supporting, you know, what we were seeing back on the last couple of charts here, that $6 region as well, big area of interest. I think giving up 6 would be encouraging to a lot of bears. So you bulls, you don't want the bears being encouraged. You want them as discouraged as possible, which means holding 6 as hard as we possibly can, bouncing our way up out of that hole if you are a bull. But if you're a bear, you want that 6 getting snapped up to the downside. Implied volatility here, you know, important to keep an eye on here. You can see it's actually fading downside. So the lower implied volatility goes in the relevant trade time frame for the particular trade that you're looking at, the more opportunity you have for potential IV pump, right? Which is good for options buyers. But understand that if you bought options within the last like 4 weeks, you have seen a bit of IV crush as IV has come from 280% down to about 180%. So understand that risk. IV through the Greek Vega is really very important. But, you know, let's take a look here now at the options chain here on Spirit stock today and get an idea for what the options traders are thinking heading into tomorrow. Relatively small sample size, about 74,000 total contracts traded, but we can't expect millions from a stock like Save, right? So we have to work with what we have, but as always with a smaller sample size, take this with a grain of salt. Call put ratio here, we're looking at about 44% calls, about 56% puts, and that short-term speculation, that 0 to 20 delta range, we're seeing about 14,900 calls, about 18,200 or 300 puts. So interestingly, both on an overall call put ratio perspective and a short-term speculation bias, we are seeing the chain here lean slightly bearish on both of those. But again, you have to take this with a grain of salt. Whether that supports your bias or goes against it, the data is only as relevant as it can be with less than 100,000 total contracts, right? You could have had one put buyer come in today, buy 15,000 puts short dated, and it throws off the entire ratio on both fronts. So take it with a grain of salt when volume is low. It helps out tremendously if you guys just leave a quick like on the video before heading out. Thank you, I appreciate it, and I'll see you in the next one.